think about the arc of what drove TD Ameritrade into the arms of Charles Schwab, I keep coming back to this disruptive force of Robinhood. Totally online broker with a bare-bones presence where you trade for free. Something that very much appeals to frugal millennials who hate paying for anything on the internet. The fact that Robinhood was able to raise an astounding $912 million, the last tranche received at the end of October, at a $7.6 billion valuation, told you that the writing was on the wall for this industry. To put that in perspective, E-Trade, which was one of the first electronic brokers, and it's got close to $4 in earnings power, only has a $10 billion valuation. Of course, at this point, Robinhood may have nearly as many accounts as E-Trade. We don't know. The exact numbers are hard to come by. What does it say, though? What does it say about valuations in the online brokerage space? It could mean that the private market is simply insane. Hey, why not? How can a money-losing outfit with roughly the same number of accounts be worth almost as much as a highly profitable company that does the same thing? It seems especially stupefying when you consider that E-Trade just reported an outstanding quarter last month, where management laid out a very solid plan for this new commission-free year. Hard to believe that E-Trade's legacy business is truly a negative, isn't it? Which brings us to the big question. Why are these venture capital investors paying so much for Robinhood? I think they must love the age of the company's customers. That's what it is, not their current account balances. Just like the E-Trade viewer, Robinhood has brought a whole new generation of investors into the market, the iPhone-toting millennials, who actually like owning individual stocks. Now, I know the conventional wisdom on Wall Street says that you're an idiot if you take the risk of buying individual stocks. We're constantly told you're a dope if you put your money in anything other than an index fund. Regular viewers know I love index funds, love. But they're not going to get you rich in a relatively short time like individual stocks can. That's why if you have the time and inclination, it's worth putting some money into individual stocks aside, next to the index funds. Robinhood investors get it, just like their predecessors who flocked to E-Trade in the 80s and 90s. The one thing Robinhood doesn't get you, they don't offer fractional share trading, which is a shame. But one of their rivals, SoFi, does. Last week, we had the CEO of SoFi on, Anthony Noto, and he gave us tremendous insight into how millennials prefer to invest. Oh, yeah, they like ETFs. But they're truly partial to single-digit stocks. They're born speculators, which is exactly what I tell people to do when they're still young enough to make any potential losses back. According to Noto, millennials were drawn to the likes of Ford and GE, low-dollar stocks, until recently when SoFi began offering a brilliant idea, fractional shares. Thanks to fractional trading, the number one stock is now Amazon. They're buying $1 worth of Amazon to start a position. I say, great. What else are they buying? Well, of course, they like the rest of the FANG cohort. But while this is anecdotal, they're also drawn to Tesla, who isn't even my wife Lisa, my kids want one, and Beyond Meat, both of which fit the millennial zeitgeist. And yes, I have changed my tune on the stock of Tesla. The products are too good. They could easily raise a couple $2 billion tomorrow if they needed it. And even after you threw a rock past the window, they still got $200,000 on that pickup. Enough. I mean, it's just got too many things going for it. Millennials like the cannabis stocks, although I can't say that's the case still because they've gone up in smoke. What matters, though, is that Robinhood's zero commissions model has finally caught the fancy of a whole new generation of investors. And they did it without spending much on advertising at all. Now that this private company raised almost $1 billion, it's able to blow out its business model, scale it, as they say. And as we know from the new commercials, they seem like they're everywhere. Because of a newfound love for stocks by millennials, the brokerage landscape will never be the same, just like it was when E-Trade got its start 37 years ago. Stefano in New York. Stefano.
Jim, how are you?
I am good. How about you?
We've been watching your show, me and my father, since I was a kid, and I just want to say thank you. It's something that really brings us together.
I am thrilled. That's what I love. I love to hear that. Thank you. How can I help you?
I have a question about PayPal's acquisition for Honey. They recently bought this company for $4 billion. I wanted to know, what was the thesis behind the purchase?
Oh, my God. They want to get upstream. They want to just do more than payments. This is a terrific discount. I asked your kids. I asked mine, or asked you. Actually, maybe you use it. I have to tell you, I think it was brilliant. I want Dan Schulman to come on the show, and I will sing the praise of this since I found out that everybody uses it. Let's go to Ann in Indiana. Ann.
Jim, thanks for taking my call.
My pleasure.
I saw an article in the paper on Sunday that the Fed is considering getting into the payment space with FedNow. Do you think that's possible, and how would that affect a stock like MasterCard?
I kind of missed that question. It sounds like, what do I think of MasterCard? Well, my travel trust owns it. I think the world of it. It doesn't really matter about the reserve payment. What matters is that it's growing like a weed, and it's just a secular force of paper into plastic, which still works. Investing and trading have caught the fancy of a new generation of investors, despite what the Graybeard said that they should only own index funds. The brokerage landscape will never be the same. Much more Mad Money ahead. Black Friday just days away. Looking for deals in the retail space? I'm talking to, hey, remember Zappos? To find out what the private retailer can teach us some about public companies. Then, is ugly produce the key to our food waste problem? I'm going to talk to one company that says they seem to think so. And all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.